I have learned that if one advances confidently in the direction of his dreams and endeavors to live the life he has imagined, he will meet with a success unexpected in common hours. Henry David Thoreau. Folks, we have a great training for you today. I recorded it earlier this afternoon. Use all the charts all the time. If you're a subscriber, it'll be in the show notes. You get emailed to you every day with this video. If you're not a subscriber, go for free. Sign up at chartingwealth.com. Go there. We'd like to have you on our list. We never spam that list, and we'll make sure that every day the market's open, you get the reviews that we do. Plus, once a week on Friday, we record your comprehensive review and forecast. We see stocks and gold up for the day, bonds down. Let's talk about where we are and just what's happening. What do we see the first day of the latest 5-day candle on the weekly chart? Remember, always start with the biggest chart first because it matters the most. We see that the price percent oscillator is still heading down, although it is slowing. Last week, we ended the week with a solid green down candle reaching a lower low. That solid green means that it was a slowdown in the down movement, the first that we had seen in 4 weeks. I mean, literally it was accelerating each week, getting worse. And it has apparently bottomed out somewhat. And so far this week, what do we have? We have now, this is just the first day, but it is a green open box candle with a little wick on the top, no wick on the bottom. It hasn't pushed higher than the prior week's candle, but it is an up candle, up for the day, 3.25%. The derivative oscillator is losing momentum this first day of a 5-day candle. I keep saying that because it's got 4 more days to finish drawing, and it can change radically in that time. But we see that the derivative oscillator's lost some downward momentum, and the price percent oscillator also slowing down in its down movement. We go to the 2-day chart. What do we see there? Well, we had the prior 2-day candle represented Wednesday and Thursday. This latest one represents Friday and Monday, so it is drawn now, and it is, we're going to look, the high 262.43, the prior high 262.80, so it's not hit a higher high yet. We will continue to watch and see if indeed that does occur. The candle body is higher than the prior one, but again, not topped out any higher, still below the weekly trend line. That last candle pushed through the 2-day trend line. Trend is still down, but the price percent oscillator, by that we mean price percent oscillator is negative, but it is heading up. And the derivative oscillator is losing downward momentum, but we still have the overall mood is down on both the 2-day and the weekly. We go to the 4-hour, and of course that 4-hour chart powerfully bottomed and then started moving up. The trend weakened, and we can see if we look at these days on the Tuesday the 24th, and then the 25th, and then the 26th, that was Tuesday, Wednesday, Thursday, strong up movement. And then on Friday, things started moving down and sideways. Now, we recovered some for the day today, but you can see we haven't hit a higher high than we did all the way back on Thursday. So right now, sideways slide tending up on this shorter chart. We can see it, derivative oscillator, which is our leading indicator. It's the triple smooth version of the relative strength index. We see that it peaked back on the morning of the 27th and has started losing energy. Price percent oscillator heading up about the same angle. So looks like the market is, again, slipping sideways, trying to see if it's going to have enough energy to move up with any pomp as it did on those 3 days last week. That was Tuesday, Wednesday, and Thursday. So we're still watching. What are we primed for, you might ask yourself? What would be great if it happened? Of course, that would be for the market to roll over again and head down. Don't mean that in a bad way for people who are invested in the market. I'm talking about that's where our weekly and 2-day trend lines want to lead us, along with our price percent oscillators on those charts. If that happened, I would be delighted because I would practice trade the down move. Things keep going up, then we're going to have to see the 2-day flip over and the weekly until we get any kind of confirmation that things are recovering sufficiently to warrant us trading in the S&P 500. Why? Because we follow the rules. Why? Because the rules tend to work. And if you want to go start jumping into up moves now with the sideways slide and this kind of volatility, again, kiss a successful practice trade goodbye. It is not the way to do it. Way too much risk to take. Remember, first rule in investing, don't lose money. Even practice virtual funds. Second rule, make money. But the first rule is don't lose it. You can't make money if you keep losing money. Let's go now to the Qs. What do we see there? We see this week starting off with a green up candle also. Price percent oscillator losing a little bit of downward momentum. Derivative oscillator also. Similar to the S&P, won't repeat all that over again. The 2-day chart is heading up, but still negative on the price percent oscillator and the derivative oscillator losing downward momentum. We have 2 green up candles, but again, not reaching a higher high than we did on that prior candle. We go to the 4-hour chart, and again, we see that sideways slide there. The price percent oscillator is heading up, derivative oscillator losing momentum. So again, waiting to see if the market is simply digesting these prior gains over those 3 days, Tuesday through Thursday of last week, or if it just didn't have enough energy and that 4-hour chart is going to rocket over down. Don't know. We're going to let the charts lead us. However they lead us, we will follow. That's what we do, guys. We're trend followers. The best way to do it. Now, let's head on away from stocks and into bonds. Bonds were the only thing down for the day, 0.82%. But we can see that our weekly chart, as far as our Heikin-Ashi candlestick shows us, the average pace nonetheless is up with a green candle forming for the day. Now, these are Heikin-Ashi candlesticks. I'll put in the show notes for you. I'll link a video in there for you on Heikin-Ashi so you can understand them. Those who are new to them, it means average pace in Japanese. It helps us see average pace and price trends easier than your standard candlestick. We love them. I think about 150,000 people have taken that training. I'll make sure you get it at the end of today's video today. Now, what do we see going on? We see the price percent oscillator is heading up, derivative oscillator losing downward momentum. So the trend is still up even though bonds were down 0.82% for the day. We go to the 2-day chart. And remember that 2-day chart crossed over going up back on Tuesday the 24th. Made a successful trade based upon that. It was good to me. I got up and got out when we had that 4% pop. It was quite nice. I hope a lot of you practice traded that too. And what have bonds done? Even though they had that pullback, that pop up and pull back, look at how successful that trade has been. It just keeps going up. So again, price percent oscillator heading up. Derivative oscillator still negative, which is quite weird. It's those 8 days of strong down move, those 4 down candles. Now we go to the 4-hour chart. What do we see there? We saw where bonds were up in the morning and then pulled back some in the afternoon, but bonds rotating over back on the 23rd in the morning, heading up on our charts. Slid sideways for a little while, then bumped up again, both on Friday morning and afternoon, and Monday morning, pulling back there toward the end of the day. Derivative oscillator lost some energy. Price percent oscillator headed down. So again, if you're in that bond trade, keep a close watch on your profits and on your practice trade, paying attention again to all the charts all the time, just like our special training for our subscribers has in the show notes for you today. Now, we're going to leave bonds and go to gold. What is gold doing? Well, gold looks like it's trying to cross over going up. Gold is up for the day 0.44%. If that happens, we could have a weekly vertical crossover going up on gold by the end of the week. Now we see that the price percent oscillator is also losing some momentum as the derivative downward momentum as the derivative oscillator heads. I think I said that backwards. Derivative oscillator is losing downward momentum as the price percent oscillator heads up. Let's go to the 4-hour chart and look, it's getting very close to a crossing. God, I'm sorry, folks. The 2-day. We go from the weekly to the 2-day. 2-day chart getting close to a crossing on the price percent oscillator. Derivative oscillator losing downward momentum. Red open box candle, which again is a positive sign, not as strong as a green open box candle. Really, what we'll look as we see on the 4-hour chart, you'll see a little more as to why this candle's forming. But look at that, gold is trying to cross over. Didn't do it this 2 days, so maybe by Thursday, the close of the market, well, no, Tuesday and Wednesday, so by the close of the market on Wednesday, we might, if gold keeps going up, have a crossover going up. We'll pay attention and watch for that. Now, as you see, this is why we have that red open box candle, because we had green up movement. It's not gone down so much as it's gone sideways, slowing that upward movement. Price percent oscillator flattening, derivative oscillator losing upward momentum. So we'll look and see, is gold just digesting that super strong gain it had last Tuesday morning? We'll see. Is it just digesting that, getting ready to head up, or is it getting ready to roll over and go down? Don't know. So what we could have is a bounce off on that 2-day chart. You know, it looks like it's getting ready to cross over, but it may bounce away, particularly if that 4-hour chart rotates over going down strong. So keep your eye on either occurrence, either a strong up movement or a rollover and a down movement in gold. Folks, that's where we are as we end the day. Again, take that special training for subscribers. If you're not a subscriber, go to chartingwealth.com, sign up for free. Thank you for all the book orders. We've been fulfilling those, and we so appreciate your support during these times in particular. And we just appreciate you guys. You have questions, problems, concerns, always feel free to email us or post questions and such in the notes, or I guess in the comments on our YouTube channel. Thank you for everyone listening to the podcast, the YouTubes, the subscribers, you name it. God bless you, my friends. All the best from the whole team at Charting Wealth World Headquarters.